Las Vegas real estate is slowing down even further. If you're a buyer and you're waiting for the interest rates to go down, I don't know when that's gonna happen. It just keeps getting delayed and pushed back. Days on market are climbing. Average prices are dipping. Probably not a good time for you to sell. If your house is not in great shape, not gonna work anymore. If you've been waiting for leverage as a buyer or clarity as an investor, this is your update. Hi, and welcome to Invest with Jim, where you'll find real estate insights that no one else is sharing. Every month, we break down what is actually happening in the Las Vegas real estate market, so you can make smart decisions as a buyer, seller, or investor. So the first thing that I notice here, of course, is days on market. The median days on market is up 9%, and the average days on market is up 8%. This is one of the strongest signals of a cooling market. Homes are sitting longer, giving buyers more leverage and putting pressure on sellers to price realistically. We're not seeing homes sell in one weekend like we did in 2021. Buyers are taking their time and sellers are really feeling. Prices are either flat or they're down. Median sale price stayed flat at $485. The average sale price went down 4%. The average list price went down almost 6%. This tells us that the mid-market is holding, but higher end listings are feeling more downward pressure. Inventory continues to go up. It's up about 2%. Inventory is at its highest in years, reinforcing buyer leverage and softening seller control. That means more options for buyers and more competition among sellers. The actual sales has gone up almost 4%. So even though sales rose slightly, it's taking a little longer to sell, and we're seeing a lot of price cuts still. Price cuts remain high, showing that sellers are adjusting their expectations to meet the market. I wanted to thank everybody that left me comments before on previous market updates, and one thing that a lot of people have been asking to see are the numbers about withdrawn listings. I said people are taking homes off the market and putting them back on. Well, I brought the data for you. So last month, there were 170 listings that were withdrawn from the market or delisted. The interesting thing about that is I did a cross check to see if they came back on the market, and 127 of those actually did come back on the market. When I also dug deeper into what were the days on market when they withdrew this listing, this is what I found. Median days on market was 130 days, and the median cumulative days on market was 140. So what that means is a lot of these listings were listed for like over 4 months. They took it off the market and now they came back on the market. So again, 170 withdrawn, 127 of those back on. So that's skewing the days on market. That's what I mean by that 8 and 9% increase might not be a true reflection of what's actually happening. So if you found that point interesting, give me a like and subscribe and comment down below, and I'll do my best to bring you that information that you're asking to see. So another data point that I wanted to start tracking starting this month was foreclosures and short sales. We haven't seen foreclosures and short sales for many years now, so this is another indication that the market's changing a little bit. On the MLS currently, they're saying that there are 37 foreclosures that have commenced. So basically, the owner still owns it, but the bank has started the legal process of foreclosing on the property. There are 49 foreclosures on the market currently. That means the bank has taken it over already, taken the home back, and now put it on the market for sale, being owned by the bank. So there's 49 of those. And then short sales, there are 48 current short sales on the market right now. And that just means that the owner of the property is behind on their mortgage, and now they're trying to sell the home for less than what they owe for it. So another indication that the market is changing a little bit. And the last new data point that I'm going to introduce this month are homes that are for sale and rent simultaneously, because I started noticing there's more and more of these on the market right now. So right now, where there's 6,500 homes for sale and there are 2,300 homes for rent. So when I cross-referenced the homes for sale and for rent, there were almost 170 homes that were on both sides. That's going to be an interesting point. I'm going to do a whole dedicated video that's deep diving into why this could be happening, possible reasons for it, and what it indicates in our market right now. So what does this mean if you're looking to buy? Days on market continue to increase, inventory keeps increasing, and sellers keep cutting the prices when they don't sell. So if you're like me and you have like home searches set up and stuff, one thing that I've noticed is there are certain criteria that was not returning any results for me for a long time, but now suddenly I'm seeing more and more of those show up on my search, and I'm being notified every time they cut the price too. So if you're a buyer and you're waiting for the interest rates to go down, all right, I don't know when that's going to happen. It just keeps keeps getting delayed and pushed back. But if you're looking to buy when the rates go down, be careful about that thought, all right? Because as a buyer right now, you can negotiate on the sale price, closing costs. You can also negotiate interest rate buy downs. You can negotiate your agent's commission completely, close dates. You can ask them to leave things for you like furniture. You can ask them to pay off the solar that they put on the house. When the rates go down, more buyers are going to be able to qualify now. So now you're going to be competing against more buyers. That's going to increase the demand, and that kind of shifts the leverage back over to the seller side. And what do you think is going to happen when rates go down? I think prices are going to start creeping up again. So it's almost a wash. I'm not saying rush out and buy now because prices are going to go up when rates go down, which they will. But I'm just saying if you're qualified now and you have your money saved and you're ready to go, I wouldn't wait too long. You have a lot of options. You can negotiate really good terms. And if rates do actually go down at some point, do the refinance thing, and then you locked in that lower price now and not the increased price for when the rates drop. So if you're a seller, there's still 1,800 homes that are selling every month here, all right? So you can sell still. There are buyers out there still, but they're not gonna fall for these inflated prices like, oh, my neighbor sold for this much, let me add 10K. Not gonna work anymore. You might have to drop 10K at this point actually to get yours sold, right? Because you're competing against more people. If your house is not in great shape, do the work if you wanna sell, because buyers are not just buying stuff to buy and put in all the work right now. They have options, they have choices. They're gonna want something that's in good shape that doesn't require a lot of work. And if it does require a lot of work, they're gonna want a good deal, all right? Again, not 2021 anymore. You can't just put anything on the market and someone's gonna buy it. It's not the same market. You gotta understand that. So if you're a seller right now and you need to sell, reach out to me. I'll come take a look at your property. I'll assess it and I'll give you a realistic plan for if you wanna sell right now. And if you're not realistic, you're probably gonna decide not to sell. But if you have to sell, you need to work with someone experienced in this market right now. So I'm gonna do a breakdown by area. Here are the Summerlin numbers. The days on market increased to 52%. Sales price went up. List price was flat. List price to sale price ratio went up. The listings went up 9% and the sales went down nearly 13%. I think the new home sales are definitely doing something to these numbers here because the list price to sale price ratio is so high. I think that's being driven by standing inventory, because when you buy from a builder, you're pretty much paying whatever their price is, all right? Because they're offering you all those incentives and things like that too, so they can maintain the high sale price. I think that's what's going on in Summerlin. As far as Henderson goes, I mean, days on market also increased over 50% and sale prices went down 2%. List price to sale price ratio is pretty flat. Listings have gone up in Henderson and the sales have also gone up in Henderson as well. So again, Henderson is kind of like a Summerlin situation where, you know, these are highly desired areas, so they're still selling. They're just not selling as fast as they once were, but you know, price right, you will sell. In the Northwest, in general, everything kind of went down except days on market went up, all right? So what I'm seeing here is people that tested the market or whatever decided that this is not a good time to sell for them, so they're taking off the market. So this is a pretty good representation of what's really happening to the market, all right? In Southwest, also everything is down in the Southwest, including days on market, surprisingly. So again, that just tells me that the market is softening and shifting to buyers. North Las Vegas, here's an interesting one. We're seeing increases here, all right? And just slightly on the days on market, but sale prices, median list price, sale price to list price ratio all increased slightly. There's more listings and there's actually more sales in North Las Vegas. So what this tells me is that affordability is key right now. North Las Vegas is one of our more affordable markets here in Las Vegas, and we're seeing their sales numbers do very well over there. So what that tells me is people are still willing to go and buy a house if it's in the 400s, right? But they're not willing to go buy something if their payment becomes too high, all right? So the affordability factor is really being shown here with these North Las Vegas numbers, in my opinion. So that's what's going on in our market. But let me tell you a little bit about what I did this last month. I did attend a Coldplay concert. Just kidding, I didn't. I took a vacation to Utah with my family. We did some hiking, enjoyed some cooler weather. We went to an amusement park. It was a great time. And I was able to try my Meta glasses on these roller coasters, and it was really cool. I was really worried that they were gonna fly off, but I got it to work. You know, got to see all my little nieces and nephews getting big, and I just love seeing my kids hang out with their cousins. Now, I also went on a golf trip too, and it was really fun. So the Las Vegas market is cooling, but this is not a crash. Strategy matters more than than ever right now. If you're thinking about buying, selling, or investing, you definitely need to reach out to me so we can come up with a strategy for your situation and see how we can best navigate the market for you. Thanks for watching. Don't forget to like, subscribe, and share, and I'll see you on the next one.